Good evening to all of you. Welcome to another round of weekly market update by SC Securities. First of all, I would like to apologize from me all. We couldn't take the presentation for last couple of weeks due to some unavoidable reasons. So, my apologies for our daily viewers. Anyhow, this week we come up with news related to market and of course an insight to our economy and the outlook for international commodity markets and financial markets along with the technical analysis as usual. So quickly moving to this week's market update, as you can see the screen now, this week also can be recognized as a repeating week for CSE because for the first time in CSE's history, the ASPI index managed to surpass the 11,000 benchmark. So if we come to the very first day of trading, Monday, ASPI ended up reaching a level of 10,750.82 with points up by 86.28. Actually, on the very beginning of the trading session, we could have observed a panic selling in the stocks related to banks and the financial sector because with the budget that was announced in last Friday, 12th, the government proposed that the VAT on banks and financial services are going to increase from 15% to 18%. So because of that reason and also the imposition of another new one-time surcharge tax on corporates and individuals with a net profit over 2 billion, uh, investors believe that a major impact could happen on these banks and financial sector companies. So because of that reason, they started the trading session with a kind of a panic selling. So because of that reason, in the very beginning of the trading session, ASPI caused a decline. But anyhow, on the back of the gains of LOFC, then LOLC and Expo, ASPI bounced back to positive territory, reaching a new record high. So this continued Tuesday as well. ASPI for the first time in history reached to a level of 11,008, surpassing the 11,000 benchmark time. And the index was up by 255.51 points up, along with the S&P SL 20 index, which went to a level of 3,606.85 with points up by 8.47. So on Tuesday, so the Tuesday's turnover recorded to a level of 10 million, whereas the out of that total worth of 4.8 billion was contributed from stocks of LOFC and Expo. So on Wednesday, momentum continued and SPI managed to reach to a level of 11,024.89 with points up by 16.6, and the major uptick was recorded due to the fact that investors believe that the export earnings company could have been benefited from the continuous rupee depreciation over USD. So that's what the reason for the that recent pick in the prices that was recorded in Wednesday. So, but anyhow, the foreigners continue to exit from the market with overall of 769 million on Wednesday. So Thursday was a holiday for Colombo Stock Exchange, and on Friday, that means today, SPI closed in red territory with the SPI bouncing back to level of 10,658.72, and the index was down by 366 points. Nevertheless, S&P SL 20 index shows an upward movement with the index reaching to a level of 3,674.58 with points up by 21.92. So for the when it comes to turnover for the day, it was recorded to be somewhere around 9.3 billion, which was actually higher than the this year's average daily turnover. And the as usual, foreign sales was amounted to be somewhere around 626 million compared to lower foreign purchases of 125 million. So we, as far as we observe that ASPI touched the level of 11,000, but now the Friday witnesses have bounced back to 10,000 levels. So if this bear momentum continue to happen in the next week as well, we could expect the index to test the support level of 10,450 to 10,500. So quickly moving to this week's economic update. uh, Sri Lanka's manufacturing sector statistics revealed by Central Bank of Sri Lanka this week. So, as of the Purchasing Managers Index, the manufacturing sector recovered with a points to 60.4 in October, and that was majorly driven by the local order as well as the exports in the apparel sector. So this resulted the increase in orders for both of these sectors, and that is what the major reason for the pickup in manufacturing index for the month of October. So as far as the participants of both the sectors are saying, like they could have done more if the employment was good and if the travel restrictions are being lifted as early as possible. So, because of that reason, and even the restrictions that was prevailed island wide was lifted very recently, so they could get more employment to their organization. So, because of all the purchasing managers index upline from upside movement from the manufacturing sector. Along with that, the services PMI also recorded a higher to reaching a level of 57.9 with the business activities that has been progressed after the travel restrictions and all. And this momentum could have been witnessed in the areas of financial services, transportation, education, and those kind of service areas. So, when it comes to the expenditure, as per the central bank's statistics, imports continue to soar, and we have observed the fact that merchandise imports remain to be almost the same. Where intermediate and investment imports showcased a decline. But expenditure on the consumer goods importing continued to soar because the contribution from the non-food consumer goods, that's basically because of the vaccine importation. So during past couple of weeks, the government has import vaccine for the community here, and now the people over 60 ages are getting their booster shot. So we can expect this import expenditure to rise up in near term, near future as well, because of this vaccination thing and the ongoing COVID-19 pandemic within the country. So, when it comes to treasury yields this week, over the 3 years, 3 months, 6 month, and 12-month showcased a decline. At the 3 month treasury yields was down by 21 basis points to reach 7.77 over 7.98 that was recorded last week. And so bounced back to 8.03% from 8.12 in the last week, and also the 12-month yield was also witnessed a decline of 2 basis points to reach 8.17. But majority out there was sold from 3-month treasury bills despite the observed declining in yields that we can see. And when it comes to the foreign exchange rate, or LKR against USD, UR, and Japanese yen was slightly appreciated this week. On contrary, on behalf of the GBP, the Great Britain pounds, LKR continued to depreciate. And when we have a light look at the commodity outlook, Brent oil, gold, copper, aluminium, all the counters that we are touching upon, was the price showcased a decline due to some various reasons. Oil prices have edged on this week because some of the major Asian country economics like China is going to reduce their oil reserves to market as per the US president's request to going together move ahead. inflation in America was supposed to be higher than what they have anticipated. So that was majorly due to the fact that the rising global energy prices. So that's why the US president joined with other nations to make effective measures to ease down the burning global prices. But on contrary, the OPEC members alleged that the decision they harm because they meant that they're not going to increase the production of oil barrels that what they are releasing now. So copper prices also fell on Thursday due to the increasing inventory levels at London Metal Exchange warehouses that eased the traders' concerns over the tightness in metal supply. Gold prices continued to go upside with the side decline for this week because investors continue to perceive gold as an inflation hedge, whereas aluminium prices also showcased a jump up on Friday despite the decline that we can observe because of the supply chain disruption worries after Chinese metal manufacturing company reportedly stopped their production after an explosion. So quickly moving to international financial markets, U.S. stocks S&P 500 along with Nasdaq went higher on Thursday, subject to strong financial results from the technology sector. This momentum could have been observed in the Japanese market as well because in their market, the chip making companies bounced the Nikkei index on Friday, and also European shares lowered on Thursday due to price declines in commodity related stocks. Uh, but anyhow, on the beginning of today's trading session, investors are more positive about the earnings despite the growing worries of the number of COVID cases that have been observed in the uh, European Union area region. So, because of these reasons, the European market on the beginning of the trading session was went up, but Hong Kong's Hang Seng Index slipped on Friday due to Alibaba's the one of the famous and the largest e-commerce trading platform in the world recorded a lower earnings compared to what have been anticipated by the investors. So because of that reason, Asian stocks on next note, where we could observe some of the Asia Pacific region shares went up other than some of the stocks like enhancing went down on Friday. So those are basically from my end. Inflation worries are there because even the Fed from US mentioned that the prices of commodities are going to go up. So the inflation worries are still there. Investors are worrying about these aspects. So we can't exactly say what will happen in the next week. Any, you better to be cautious on what are the surrounding factors when you're going to make your investment decision. So over to you, Hari.
Thank you, Sachin. So let's start with gold. So looking at gold, for the past few days, we can see slightly bullish trend in gold. So looking at June till October, we had slightly slight decline of gold, and gold was making somewhat of around lower high formations, lower low formations, and quite consolidating in between the area of 1750 1860. So that consolidation area has been broken out, and now the price of gold is trading above the daily support level 1840 1860. That even the psychological area 1800 has been broken out, and price is basically above the daily support level 1840 1860. So at the moment, for the past couple of days, we can slightly see that the price is actually getting consolidated in between the area of the daily support and also the area of 1877. So that means clearly in between the area of 1840 and 1877. So if the price manages to break 16th November high, which is 1877, we can clearly expect the area of 1900, which is another psychological area, and also 1st of June high, which is 1960. So that previous trend, which was basically bearish, has been broken, and now the price seems to be inclining in a up upwards trend. So RSI also, it's in the mid range, which is 65.25, and also looking at the moving averages, previously price was actually trading somewhat around below the moving averages, and also it was consolidating, and it's going above the moving averages, below the moving averages, and now we can clearly see that the price is actually above both 18 and 8 EMAs at the moment. So this gives us a signal that the price is actually bullish, and the gold seems to be yeah, quite bullish at the moment. So this could basically mean that the price could actually head towards the 9,900 key psychological area if the price remains to be bullish. So however, if the price manages to trade below the daily support level 1,840, 1,816, between that area and below 1,840, this could actually potentially mean that the price could actually go below the level of 1,800. So looking at the all share index, so we had over the past few weeks, the index seems to be quite bullish, and it was making certain higher highs, higher lows, even whenever the index comes down over around 100 to 200 points, but it naturally gets absorbed from the same day. And after making a high on 17th of November, which is 11,117.79, the index got rejected from that key area, and we can clearly see that we have a bearish reversal pattern over there, which is a doji star. And since the index is trading below the psychological area of 11,000, 10,950, 11,000, and which also where the price index actually closed at 10,658.72 for the week ended 19th November. So at the moment, what we can see is there's some sort of a bearish momentum in the index, since the index is trading below the 8 EMA. And with that being said, the index could test the daily support level of 10,450, 10,500, and also testing the 18 EMA. 18 EMA. So this area could be potentially a consolidation area for the index, which is basically 10,450 to 11,000, could be a potentially consolidating area. If it comes below the daily support level 10,450, 10,500, the next key level would be 10,000. But at the moment, what we can clearly see is that it is trading in between 10,450 to 11,000. So if the index manages to break the 11,000 key area, then potentially we'll be able to see it reaching the next daily resistance of 11,450, 11,500. So RSI has been cooled down a bit as well. It was quite in the overbought region for a couple of weeks, and since from October last week, we were able to see that the index was basically in the overbought region. And now it has come to the mid range, which is 62.56. So it is quite good at the moment. So with that being said, if in the upcoming week, if the index manages to be bullish, it could actually go up and test the daily resistance 10,950, 11,000. Else, if it becomes bearish again, which also gives us an indication by the 8 EMA, it could basically test the daily support level 10,450, 10,500. So looking at RCL, which is our top pick of the week, RCL, the RSI remains at 57.22, which is in the mid range. We were able to see over the past, even we were able to see in the month of October end, the RSI of RCL basically was overbought, and the price actually tested the resistance level 6061, which initially on November 1st, we were able to see the price reaching the level of 60, making a high, and then the price managed to decline to the support level of 50, 51. So at the moment, the price is somewhat getting rejected over the level of 55, 56, but seems to be bullish at the moment, bullish. But if the price manages to break this 55, 56, eventually the price could actually test the resistance of 60, 61, or the continuous rejection from this 55, 56 area could bring down the price to 50, 51, or even consolidate in between the level of 50, 56. So looking at the EMA levels, which I have added 8 and 18 moving averages, we saw some sort of a bearish momentum, whereas the price was actually trading below 18 and 80 EMA in the beginning of November. And now that since the price has come about 18 at 80 EMA, this could actually potentially mean that the bearish momentum could continue, and this resistance level of 55, 56 could be broken out, and the resistance level of 60, 61, which is the next resistance, could be tested again. So even to test the resistance level of 60, 61, the price needs to break 55, 56. If that key level of daily resistance, if it fails to break that resistance level, it could basically consolidate between the 50 and 56, or else the continuous rejection from this daily resistance 55, 56 could lead the price to test the daily support of 50, 51 again. Thank you.
Okay, so that's all from today's presentation. Hope you all like it. You can give us a thumbs up, and you can share the video if you like it. That's all for today, and let's meet you all again in next week. Until such time, have a nice day.